Hi, welcome back to Tynwald's channel. I am very grateful to everyone who is watching the video. I received some good feedback and some positive comments on things to improve, and we are doing our best to improve behind the scenes. If you see something that you like, let me know. If you see something that you don't like as well, let me know. I got a comment saying I don't smile as much, but I was like, you know what? Just keep watching the videos, subscribe. Maybe someday I'll make enough money to do my teeth, then I can smile in the videos. But anyway, so today we're going to be talking about the fun subject of the statutory environment for businesses and individuals. The first thing I just want to talk about is that when it comes to statutory requirements, it's a very important part of doing business, or just in general, if you're an individual, you do have to stay compliant. Or for individuals, it's just going to be your income tax, really. So it is really, really important that you stay on top of this. I get a lot of people like, oh, I need a tech compliance certificate. Can you make sure my stuff is in order? I can, but just rather do it as an ongoing thing. That way you're always compliant. I've come across several clients who, it goes into tens of thousands of rands that they have to pay on penalties needlessly for the most part. I mean, there are certain cases where maybe there's nothing someone could have done, and at times you can appeal those penalties, but a lot of the time there's very avoidable things like just submitting things on time or paying on time. I encourage you that, one of the takeaways from this video should be, once if you're not compliant at the moment, get yourself compliant as soon as you can. And then once you are compliant, make sure that you stay compliant. For individuals, you mainly have income tax, which is tax on money that you earn. And you also have provisional tax. But provisional tax is a prepayment of your income tax. What happens is, with provisional tax, you are estimating the amount of tax that needs to be paid for a 12-month period, and you do that twice a year. So you do the first 6 months, you pay an estimated amount of what the full tax would be for the year, and then you do the second 6 months of the year and pay the balance in that provisional tax payment. And then when the actual income tax filing period starts, then you only pay the difference, or you get money back from SARS, which everyone really loves. But for the most part, that's for like people who are like self-employed and that sort of thing. For most people, you're going to have pay as you earn deducted from your salary. That is sort of a form of provisional tax. So you get a gross salary each month, and then there's a deduction on there for PAYE, which is pay as you earn, and that's a tax that's being taken each month. So as opposed to provisional tax, which is every 6 months, now it's being taken monthly off your payslip. The main purpose of this is just so that the tax burden is not like, you need to pay 100,000 rand out to 12 months, so if they take it off monthly, then it's a bit more bearable. The other tax that you should be aware of as an individual is capital gains tax. That is for when you sell a capital asset. So a capital asset is something we would generally say that is an asset that you use over a long period of time. So if you sell your car, if you sell a house or that sort of thing, then we calculate capital gains tax on that. Just be aware that this is an additional thing that can be added onto your tax return. So the other tax that is also there is estate duty, which is paid when a person passes away because the taxman still needs money. It's also fairly important, I guess, for maybe people who might not be aware of the reason why we pay tax. In fact, I've gotten that question quite a few times. Why do we have to pay tax? So the reason why we pay tax is to contribute towards government expenditure. So generally, you pay tax, and that is collected by the receiver of revenue in your country where you're paying it. And the receiver of revenue then gives it to the government, and the government spends it on public goods and services. So that's like public hospitals, the army, the police, things that we don't pay for. You don't show up at a police station, and you're not supposed to give them money. But anyway. Okay, now on companies. So for companies, you have company income tax, similar to how individuals would have it, and that is levied at 27%. Or if it's a small business corporation, then the rate is going to be different. But we'll talk about tax rates just now. Companies also have provisional tax, and that is also a prepayment of the estimated tax that the company would have to pay over a 12-month period or over its financial year. And then we also have VAT, value-added tax, and that is a tax that companies that are registered for it can charge on their goods and services that they're selling, and then they pay that over to SARS. They pay a difference over, But I won't go into too much detail. The other tax that companies have to deal with is dividends tax. So when a company declares dividends, they have to calculate the dividends tax and pay that over to SARS. And then the last one I want to mention for companies is the pay as you earn that I spoke about under individuals. What happens is that the company will deduct that from the employees before they pay their staff at the end of each month, and then they have to pay that over to SARS. So for each of these taxes, you need to be aware of the tax filing dates when each of the tax returns need to be filed, and also the payment due dates, which will coincide with the filing due date. I'll give you a few examples. The personal taxes, those are usually, there'll be an announcement, you'll probably hear this on the radio. It's around July time of the year when the filing season opens, and then they'll announce when they close. So be aware of it so that you can plan ahead. If you need to put some money aside, because some people will just spend all their money and then they have tax to pay, and they're like, oh, I didn't know I had to pay tax. So plan ahead when you hear those dates coming up on the news or on the radio station. When you hear this stuff popping up, just take a note of the days. You can Google search as well, go onto the SARS website and just check when the dates are going to be. For provisional tax for individuals, it's going to be in August and in February. You have to do a return in August for the first 6 months of the tax year, and in February for the second 6 months of the year. And then the payments are also due at the end of August and at the end of February for the 2 provisional taxes that you have to file. And then on the company side for VAT is, it depends on your registration type. So you get different registration types. Some people are on monthly VAT or others are on bi-monthly VAT. But if you are registered for VAT, you probably know this already. So you just follow your VAT periods and you file the month after the periods that you're on. So if you're filing monthly, then you take your sales and your expenses for, let's say, for example, for January, and you have to file that by the end of February. The important thing that I want to mention, which I've seen quite a few people make mistakes on this, is when a payment date falls on a weekend. So let's say, for example, you need to file VAT monthly. That means your VAT is due on the last day of that month. But if the last day of that month falls on a weekend, then you have to pay it on the preceding weekday. So you can't pay on a Saturday or a Sunday, or pay the following Monday when it's a new month. So just be aware of that, because you get charged a 10% penalty and a little bit of interest, and it's not very nice, especially if it's like R1 million. So for individuals, this will be based on the annual income that you make. So the way we calculate it is we take your gross income, so your total income that you've earned for the year, and then from that we subtract exempt income. So those are things that you included in your gross income because you included everything there. You then take out income, things that do not have tax or should not be taxed. And for example, what is an example? Dividends, local dividends income, that will be exempt. So you then take it out under exempt income, your little calculation, and then you take out, if you earned interest and you included that at the top of in your gross income, then you will take off 23,800, which is an annual exemption for interest income. Where your interest income exceeds 23,800, then you can make use of tax-free savings accounts. And you just have to make sure that you do not exceed the limit of the tax-free savings accounts, which are currently 36,000 Rand a year. Because if you do, then there are quite large penalties to pay for that. And then after that, you will have certain deductions as an individual, mainly for if you contribute towards retirement funding. And then after those deductions, we then look at the tax tables. You can go onto Google, just search for SARS Tax Tables 2020, whatever year you're watching this in. So you search for the tax tables and then it'll show you the different tax brackets that are on there. The tax brackets, they are a method of calculating the income tax that each person has to pay. So you're taxed according to your earnings. So the higher earning people are taxed at a higher rate and they pay more tax. So higher earners pay more tax and lower earners pay less tax, which is fair because then, too much is given, much is required by SARS. Anyway, I think it's fair that high earners pay more. So you can look on there, you check where your annual income is, and then you see how much tax would be applicable to you. And then, based on the number that you get from the tax bracket, you then subtract the tax that has been paid already via pay as you earn from your salary. Or if you paid additional provisional tax on top of your pay as you earn, you subtract that as well. And if the tax that has been paid via pay as you earn and or provisional tax is more than the tax that is due according to the tax brackets, that is when you get the magical tax refund. I get this question very often of, why am I not getting a tax refund? No one ever asks, why am I getting a refund? It's always, why am I not getting a refund? Or why do I have to pay tax to SARS? So if the amount of pay as you earn tax or provisional tax that was deducted from you is less than what should have been deducted, and this will happen sometimes. Let's say you have two jobs, then your first employer pays you a salary that is applicable to the 18% tax bracket, and your second employer says, oh, I'm only paying you 50,000 Rand for the year, and they also deduct 18% on their side. If you add the two incomes, you might end up in a higher tax bracket. So the two 18% amounts that were deducted from you are not enough to cover your tax. Or you just earn lots of freelance income and stuff. Or you have lots of investment income and you earn nice big amounts of interest. Then you can be in a situation where the amount of tax that was deducted from you via pay as you earn is not enough to cover your tax amount. And in that case, you will have to pay money to SARS. And no one likes that. But as long as the calculation is correct, then you can rest assured that you're doing the right thing and you should do the right thing. Next up, company tax rates and how much a company's tax should be. So for companies, it's a little more straightforward. So you calculate your profit, and from that profit, there are certain expenses that you may have deducted from your profit, from your income to get to your profit that might not be allowed by SARS. So you add those back to your profit, meaning your profit for tax purposes goes up. And in other cases, there may be special allowances that you can claim that maybe were not part of your expenses when you're doing your profit calculation. So you can claim those. So your profit goes up or down depending on whether you have allowances or non-deductible expenses. So from that, once you have your taxable profit amount, so you multiply that by 27%, and then you check the provisional tax amounts that you've paid in for both the first provisional tax and the second provisional tax. And again, if the provisional tax amounts are higher than what's due at the end of the year, then you get a refund. And if they are lower, if provisional tax is lower, then you will have to pay tax to SARS. But fortunately for companies, that's not the only method. So for businesses that qualify as small business corporations, they get to be taxed on a sliding scale that is very similar to the individual's tax rates. So for that, again, it'll be income tax, but it'll be profit brackets. So taxable profit brackets, rather. So you're going to have different taxes where the higher you earn, the more you pay, as opposed to the flat rate of just 27% for everyone. So I think that's a good overview. There are other taxes that can come into play. Dividends tax. Okay, let's briefly talk about dividends tax. So we've just mentioned the company's tax, income tax. So what can happen sometimes is that a business can have profits and it might want to distribute dividends to its shareholders. And so in that case, you're going to have your net profit, and then from the net profit, you get dividends declared. So the important thing to note is that dividends tax is 20%. And what will happen is you're going to take your net profit and multiply that by 27% if you're on the flat rate. And then you're going to have dividends. And on the dividends, you're going to calculate an additional 20% tax. So for owner-managed companies, or where it's just maybe two partners, you'll find that you might end up paying, you will end up paying tax at effectively 47% if you do that. So sometimes it's better, depending on what your circumstances are. It might be better for the owners or for the shareholders if they're working in the company to just take the amount as a bonus they might then pay a tax that is less than 47%. That's very, very high. Okay, so that's all we've got space for today. So if you have any further questions, put them in the comment section. Or also you can visit our website and you can leave queries. There's a contact form on there, so you can put your query in there if you have any queries, or if you need actual work done, which would be awesome. Again, I remind you, just make sure that you get compliant if you're not compliant, and make sure that you stay compliant, and it will save you a lot of money and sleepless nights.